Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 13th, 2025, and we're diving into JD.com's third quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. JD.com, a leading supply chain-based technology and service provider, has just released its Q3 2025 results, and there's a lot to unpack.
Revenue and profitability overview. Let's start with the top line. JD.com reported net revenues of $42.0 billion for the third quarter, marking a 14.9% increase year over year. John, what are the key drivers behind this growth?
The growth is primarily driven by a strong performance across JD's business lines, particularly in JD Retail, which saw an 11.4% increase in revenues. The general merchandise category and advertising revenues have accelerated, contributing significantly to this growth.
Despite the revenue growth, net income attributable to shareholders decreased to $0.7 billion. Can you explain this?
Yes, the decline in net income is largely due to increased strategic investments in new business initiatives, which have impacted the bottom line. However, the adjusted EPS of 52 cents beat the forecast of 34 cents, which is a positive sign.
Operational efficiencies and future outlook. JD Retail continues to be a major contributor, with revenues of $35.2 billion and an operating margin of 5.9%. How is JD.com managing to maintain such margins?
JD Retail has been focusing on operational efficiencies and margin improvements. The operating margin increased from 5% to 5.9% year over year, thanks to strategic initiatives in product differentiation and supply chain optimization.
CEO Sandy Xu mentioned surpassing 700 million annual active customers. What does this mean for JD.com's future?
This milestone is significant as it reflects JD.com's strong user base and shopping frequency. The company is well positioned to capitalize on its leading market position in electronics and home appliances, and there's vast growth potential in general merchandise and advertising services.
Strategic initiatives and business expansion. JD.com has been expanding its logistics and health services. Can you tell us more about these strategic initiatives?
Absolutely. JD Logistics launched a new warehouse in Dubai, enhancing its distribution capabilities in the Middle East. Meanwhile, JD Health has entered into strategic partnerships with major pharmaceutical companies, strengthening its position in the online healthcare market.
New businesses reported a staggering 213.7% revenue growth. What's driving this?
The growth is driven by JD Food Delivery and other new ventures, which are seeing increased user engagement and operational efficiencies. Additionally, JD.com's share repurchase program, with $1.5 billion spent so far, reflects confidence in its long-term growth strategy.
Financial challenges and investment strategies. Despite the positive aspects, JD.com reported an operating loss of $0.1 billion. What are the financial challenges they are facing?
The operating loss is primarily due to increased marketing expenses, which rose by 110.5% as JD.com invests heavily in new business initiatives. This is part of their strategy to capture market share and drive future growth.
Free cash flow was negative at $1.6 billion. How is JD.com planning to address this?
JD.com is focusing on improving operational efficiencies and scaling its new businesses with better financial models. The company is confident that these investments will pay off in the long run, despite the short-term cash flow challenges.